Well, you should be keeping an eye out on Indus Towers, because if you see the numbers that the company reported, on the face of it, it looks a big beat that the company has reported, because the margins have increased to 57.1%. The net profit has increased by nearly 16.4%, while the revenues, while the EBITDA was higher by nearly 10% for the company. But this was all because of a big one-off of close to 550 crore rupees. Now, this was on a one-time provision reversal that was reported on the revenue front, and it trickled down all the way to the bottom line. Hence, if you see the company's revenue, EBITDA and net profit are showing a big beat. Now, other than this, there were a few other factors that aided the numbers. First, it was a drop in power and fuel cost. Then it was the lower other expenses, and thirdly, it was the higher other income. Now, if you see the power cost, that dropped by nearly 6.5% on a Q-on-Q basis. Other expenses dropped by nearly 22%, while the company's other income, that was higher by nearly 16% compared to last quarter. And as we had indicated in our preview, the company's exit charges, now that dropped sharply to around 28 crore rupees from 185 crore rupees that the company had received in the last quarter. On the tenancy addition front, if you see, that was also weak at around 685 tenancy addition, as against 2555 reported by the company in the last quarter. Though the company's tenancy ratio, now that remains stable at 1.8 times, and the energy spread also continued to remain negative. Now, one thing that was supportive for the share price was the dividend announcement of 11 rupees, which implies a dividend yield of nearly 5.4%. Now, one of the most important thing that came out from the Indus Towers result was, as we had indicated in our preview, that nearly one-third of company's towers were up for renewal. The company has said that they have completed a renewal negotiation with one of the large customers and has offered a competitive pricing. Now, the company has two large customers. One is Bharti Airtel, the second one is Vodafone Idea. And if they have completed with only one of them, which means that it could be Bharti Airtel, with whom they must have completed this renewal renegotiation and competitive pricing. Now, that indicates that they could have offered some discounts to Bharti Airtel, which is kind of negative for Indus Towers. And but they have also said that majority of the tenancies will be renewed for a period of 10 years. Now, that is positive, but overall, if you see, the numbers were a weak set of numbers, and the discount that they might have offered to Bharti Airtel is also kind of negative from Indus Towers' point of view.